Having a bad credit score is expensive. It makes it hard to get loans and credit cards, and even if you do qualify, you'll have to pay higher interest rates. Not only that, it may increase your insurance costs, cause utility companies to require a deposit for services, and limit your job opportunities or renting options, since some employers and landlords check credit. Bad credit can really hold you back in life. If your credit score is around 680 or lower, this video is for you. Make sure to watch the whole video because we've saved our top 3 tips for maintaining good credit for last. Let's jump in. First, get your credit reports to find out what's bringing down your score. You can get your credit reports for all 3 major credit bureaus, Equifax, TransUnion, and Experian, for free at annualcreditreport.com. You could also sign up for a service like Credit Karma or Credit Sesame, but whatever you do not pay to check your credit score. This should be completely free. Now begin reviewing your credit reports. You should look for the following: not enough credit history, late payments, accounts and collections, high credit card balances or maxed accounts, and bankruptcies and foreclosures. We'll get deeper into these in just a minute, but first, as you're reviewing your credit report, look for any unfamiliar information. For example, accounts that don't belong to you, inquiries that you did not initiate, bankruptcies and foreclosures that are not yours, or derogatory marks that aren't yours. If you have any of the above, this may be an indication of identity theft, and if this is the case, you'll want to freeze your credit report immediately, and you can report identity theft at identitytheft.gov. Now, look for any other errors, such as incorrect personal information, like a misspelled last name, a wrong address, things like that, incorrect dates, duplicate accounts, incorrect account statuses, and open accounts that are showing as closed on your report. Next, you should look for missing accounts. If you have an account that isn't showing up on your report, you could be missing out on positive payment history. Now that you have your credit report and know what might be bringing down your score, let's talk about what you can do to improve your score. Let's talk about not having enough credit history. To get a credit score, you'll need to have at least 6 months of credit history and at least 1 credit bureau reporting your credit activity. To get the highest score, you'll need to have at least 7 years of credit history. So if you don't have enough credit history, here's what you can do. Firstly, I would not recommend taking out a loan for the sole purpose of building credit. You shouldn't have to pay anyone to build your credit, and if you take out a loan, you'll have to pay interest. However, you could open a secured credit card to start building some credit history. A secured credit card is like a traditional credit card, except you have to pay a cash deposit up front to guarantee your credit line. For example, to get a credit line of $500, you'll need to pay a deposit of $500. But later on, when you swap your secured credit card for a traditional unsecured credit card, or if you close the account, you'll get your deposit back. Always be responsible with credit cards by paying your credit cards in full and on time every month. Never carry a balance because credit card interest rates are high. And if you know you have a spending problem, I would definitely not recommend doing this. Another option is to become an authorized user on someone's credit card. As an authorized user, you won't be liable for payments, but the account is reported on your credit report. It's only really a good idea to do this if you know the account holder has good credit habits, otherwise this could hurt your credit. One other thing you can do is try to get non-debt items reported on your credit report. Check out Experian Boost. It claims to instantly increase your credit score by giving you credit for on-time utility, telecom, and certain streaming services payments. You also may be able to get your rent reported on your credit report. To do this, you can ask your landlord to report your rent, but this causes your landlord to do more work and in some cases pay extra money, so this isn't likely to work. You can also look into a third-party service such as Piñata. Next, we're going to talk about late payments. But first, if you're getting any value out of these tips, be sure to like and subscribe to our channel for more personal finance videos. Payment history makes up a whopping 35% of your credit score, so you really want to avoid late payments. A late payment stays on your report for 7 years, and this applies to payments that are over 30 days late. The later it is, the worse it is. So 90 days late is worse than 60 days, which is worse than 30 days. Late payments that happen more recently are worse than older late payments. So if you have a late payment from 6 years ago, it will have less impact than a late payment from 6 months ago. And the more late payments you have, the worse it is for your score. So here's what you should do about late payments. First, you should pay off the late payment as soon as possible. Late payments should be a top priority because they will get worse if you wait. Eventually, the debt will be sold by the bank to a collection agency or a debt collector, which we'll talk about later in the video. Next, you can try to get the lender to adjust the account back to current. Work out a payment plan and offer to turn on automatic payments if you haven't already. Most lenders would instead negotiate then sell the debt to a collection agency. Next, if you've already paid the debt, you can ask the lender to remove the late payment. Call or write a letter asking them to to remove the payment, and don't forget to be polite. If you're lucky, the lender can get this removed from your credit report. Don't expect this to work since they're not obligated to remove the payment, but it's definitely worth a try. Next, look for errors. Now, a big disclaimer here, do not lie about anything on your credit report ever. If you find any errors with payment dates, payment due, anything like that, you can dispute the late payment. If the company cannot prove that all info is correct, then the late payment will likely be removed. Now, our biggest tips for avoiding late payments in the future are to turn on automatic payments, only take out debt that you know you can pay back, and only spend money on a credit card if you have the money in your bank account and fully intend to pay it back in full and on time every month. Now that we've covered late payments, let's talk about accounts and collections. When you're over 150 days late on a payment, the lending company will sell the debt to a collections agency, often for pennies on the dollar. This is what's referred to as an account in collections or debt in collections. Accounts in collections stay on your credit report for 7 years. This is what you can do about any accounts in collections. First, dispute any errors. If you've already paid the debt off but it's still showing up on your credit report, make a dispute with a credit reporting agency. After this, they have 30 days to respond. If you think there's an error on the side of the collections agency, ask that they validate the debt to confirm that you actually owe the money. If they can't prove the validity of the debt, it will likely be removed. Debts like this are often bought and sold multiple times over the course of 7 years, so there is a chance that there will be an error along the way. The next thing you can do is negotiate the debt down. Collections agencies purchase the debt for a fraction of the original debt amount, so anything that they receive above the amount that they purchased the debt is profit for them. This means that there is usually room to negotiate a lower payment amount, since collections agencies would rather receive some money than none. Keep in mind that paying off debt in collections won't necessarily improve your credit score, because while it shows as paid, the fact that you had an account in collections stays on your report. If you pay the debt off, you may want to file a dispute with the credit reporting agencies. They'll reach out to the collections agency, which then has to respond within 30 days. The collections agency has no financial incentive to respond since they already received their money, and if they don't respond to the credit bureaus, the negative mark will likely be removed. Always do your own research before paying a collections agency, but if you do decide to pay it off, always ask the debt collector to confirm that the debt is yours. Dispute any inaccuracies, and always try to negotiate the debt down. Now let's move on to high credit card balances. Credit utilization makes up 30% of your score, and credit utilization is simply the amount of revolving credit you're using divided by the amount that you have. Revolving credit includes things like credit cards and personal lines of credit, but not loans like mortgages and auto loans. The reason this is important is because credit bureaus want to make sure that you're not maxing out all of your accounts, because that indicates that you're a riskier borrower. When you have a high credit card balance or a maxed account, what you should do is pay down your debt. Ideally, you want to be using less than 10% of your overall credit limit, but you definitely want to be using less than 30%. This indicates that you're a safer borrower and will increase your score. Now, this next tip is only for you if your high credit card balance is due to a low credit limit and not due to a spending problem. But the tip is to increase your overall credit limit by opening more accounts. By having more credit available, your credit utilization will decrease and your score will increase. Granted, it may be hard to get approved for more credit if your credit score is low, so keep that in mind. Also keep in mind that applying for new credit usually results in a hard inquiry, which has a minor negative impact on your credit score for a few months, and then the hard inquiry stays in your report for 2 years. Generally, a hard inquiry is not something to be afraid of unless you're looking to apply for a major loan like a mortgage or auto loan within the next 2 years. Be sure to be responsible with this tip. It's not for everyone. Now let's move on to bankruptcies and foreclosures.
I declare bankruptcy!
Bankruptcy is going to stay on your credit report for 7 to 10 years, depending on the type of bankruptcy, and foreclosure will stay in your credit report for 7 years. Removing these is very difficult, if not impossible, but it's worth a try. The number one tip is to dispute any errors. If the negative mark stays on your credit report for longer than expected, you should dispute it since it should no longer be on your credit report. Regarding foreclosure, if the lender is no longer in business, you can try disputing the foreclosure. Now keep in mind that it's going to be very difficult to remove either of these unless you find an error, so it's best to just work around these by improving everything else as much as possible. Then after 7 to 10 years, these will fall off your credit report. Now it's time for our top 3 tips for maintaining good credit. Number 1, turn on automatic payments. This will ensure that you're never late on a payment. Keep in mind that it's still good to check your accounts on a regular basis to make sure they're actually getting paid. In addition to turning on autopay, you should always pay the full statement balance. This leads to the next tip, which is to never use debt that you can't pay back. If you know you can't make payments for a loan or don't have the money to pay off your credit card balance, you should not be using debt. If you have a spending problem, avoid using a credit card until the spending habits are under control. In addition to this tip, you should keep an emergency savings fund so you can avoid using debt when emergencies occur. And the last tip is to be patient. Building credit takes time, especially if you currently have late payments, accounts in collections, bankruptcies, or foreclosures. It can be a slow and boring process, but if you're patient and use credit wisely, your credit will increase over time. Let us know in the comments why you're working on building your credit, and be sure to like and subscribe for more videos.